So get this. This is exactly why XRP exists. That's a direct quote from Paul Barron, who calls himself a technologist and runs this massively successful YouTube channel. His channel's got something like 1.6 million subscribers. Yeah, pretty huge. And he's definitely in the pro XRP camp. I want to show you this post he put out where he digs into Ripple's game plan with XRP working as a bridge currency, plus how it stacks up against these quote-unquote bank coins everyone's talking about. And here's where it gets interesting. I'm actually going to pull up an old post for you, like really old, that connects to all of this. There's this statement from Brad Garlinghouse, Ripple's CEO, and we're talking 2016 here. Ancient history in crypto years, right? But what he laid out back then? Dude, it's literally happening right now as we speak. And it proves exactly why something like XRP needs to exist for this whole bridge currency situation, which is what it's actually being used for today. That specific use case has been picking up steam this whole time. Now, I know, people want to gripe about how XRP hasn't completely demolished Swift yet, turning it into a dinosaur. But honestly, I've never been in the camp that says XRP has to murder Swift to be a success, or that it's even going to do that necessarily. What matters is XRP finds its place where it actually works best. And here's something to keep in mind. Yeah, XRP's been kicking around for over 13 years, but we're still in the baby stages of this whole crypto thing. All right, so listen to this. We're talking about literally less than a year ago, like January when the new president took office. That's when the entire United States, the biggest capital market on Earth, officially switched gears and became pro-crypto. I mean, come on. That's gigantic. That shift is going to ripple through everything. Everyday investors, major corporations, massive institutions. We're watching history unfold in real time here, and honestly, we've barely scratched the surface. But let's talk about XRP for a second. Up until now, it's been absolutely dominating. Still one of the clearest early success stories in the entire crypto world. Now, hold on. I've got to throw this out there before we dive deeper. I need you to know something important. I don't have a finance degree. I've never worked on Wall Street. None of that. So I'm not sitting here giving you financial advice. Please, don't go buying or selling anything just because I talked about it in a video. Seriously. I'm just a guy who's really into crypto and likes making videos about it on YouTube. This is my passion project, my fun thing. That's the vibe here. Okay, so get this. Paul Barron dropped this post just yesterday. He wrote, XRP plot twist. Is this what Brad Garlinghouse was working for all along? Every major bank is racing to launch its own stablecoin while Swift pitches neutral rails. The reality? JP Morgan, Bank of America, Citi, Wells, US Consortium stablecoin, ING, Deutsche, UniCredit, plus 6 others. Euro stablecoin by 2026. And then there's a quote, Bank of America CEO, we're ready to launch. That's the quote, we're ready to launch once regulations clear. He says banks don't want neutral infrastructure, they want control. But here's the kicker, more proprietary systems equals more fragmentation. JPM, Bank of America, America Coin, Euro Bank Coin. Who bridges the walled gardens? This is exactly why XRP exists. Look, you're absolutely right about this. Now, if we're talking about a stablecoin that you can actually trade on exchanges, that's a different story. You could try using that, but here's the thing. It has to be backed by something real, and those are always going to be centralized, which brings its own issues. It really comes down to what you care about most. Here's what people don't always think about. There are always going to be parts of the world where if your coin is backed by the dollar, they won't touch it. Or maybe it's backed by something else, and for political reasons, they still won't use it. That's just reality. But here's where it gets interesting. With a neutral asset like XRP, something that doesn't belong to any single country or jurisdiction, there's literally no reason for people to avoid it. And you know what really gets me? When people complain about XRP being too volatile to work as a bridge currency. I've heard this so many times. Why would anyone use XRP when the price moves around so much? That argument has never made sense to me. Think about it. XRP settles in 3 seconds. 3 seconds. The volatility argument just falls apart when you're talking about transactions that fast. Look at XRP's price right now. Okay, now look at it 3 seconds later. Did it change? Almost never, right? And here's the thing. Even with stablecoins, it's not like there's zero risk. You've seen stablecoins lose their peg before, haven't you? Because I definitely have. Tether, USDC, you name it. Stablecoins absolutely can lose their peg. I mean, if you pull up Livecoin Watch right now and check it out, USDT Tether is sitting at just over $1. USDC is right at $1, but here's what people don't realize. It actually varies. That's why when you click on one of these and really look at the chart, you can see it's kind of all over the place. Now, I'm not saying it's crazy volatile or anything. It's always hovering around $1 unless it notably loses its peg, which doesn't happen all the time. But you can't pretend there's zero risk of that happening. What I'm getting at is this. When something settles in real time, who cares about those tiny fluctuations? So when people argue that XRP isn't properly positioned to be a bridge currency, that's just a ridiculous argument. Now here's why this matters. We need to connect these walled gardens, right? That's exactly what's happening with a lot of these banks. And that's where XRP makes perfect sense. So check this out. I stumbled across this post and it's actually kind of mind-blowing. It's called The Case Against Bankcoin, written by Brad Garlinghouse, the CEO of Ripple. Here's what gets me though. This thing was published back on August 24th, 2016. We're talking over a year before XRP even hit my radar. I had zero clue what any of this was. And Brad's already out here laying out the entire playbook, working through all these problems that nobody else was even thinking about yet. And when you actually read what he's saying in there, it's the exact same thing Paul Barron's been explaining. You've got all these banks operating in their own little bubbles, these walled gardens that just don't communicate with each other. They need something to bridge the gap. That's where XRP comes in. It was built for this from day one, like that was always the plan. Fast forward almost 10 years and you know what? That core premise hasn't changed. It's still doing exactly what it was designed to do. So here's what Brad Garlinghouse has wrote. UBS, Deutsche Bank, Santander, and BNY Mellon announced their utility settlement coin, a new digital asset they hope will become the industry standard for blockchain settlements. They expect banks will initially use the coin for post-trade settlement and clearing by early 2018. After they secure a blessing from regulators and central banks. While this development signals significant market traction for an institutional use of digital assets, I have to say it's deeply misguided. A bank-issued digital asset can only really efficiently settle between the banks who issued it. Then, two scenarios can play out. Scenario 1. All banks around the world put aside competitive and geopolitical differences, adopt the same digital asset, agree on its rules, and harmoniously govern its usage. Fat chance. Scenario 2, the more likely scenario. Banks not in the issuing group issue their own digital assets with their own sets of rules and governance. All right, so think about what this really means. This was playing out back then, and guess what? It's still playing out right now in 2025. Here's the thing. If you're not part of the group that's issuing whatever bank coin they've got going, and you go ahead and issue your own, how do those two even talk to each other? Where's the trading pair? They're competing, right? So how do you swap between them? This is the problem we're looking at, and this is exactly why you need XRP. It bridges all of this stuff. That's what it does. Without it, none of this makes sense. Look, walled gardens are always going to exist. They've been around forever, and they're not going anywhere. Some of them will catch on and do well. That's fine. But here's the key. Because those walled gardens exist, that's just one more reason XRP will always make sense as a bridge currency. There's really no question about it. So then Brad wrote, we're kind of seeing this already, as A Times points out, with Citi's Citicoin and Goldman Sachs's Settlecoin. The result would be an even more fragmented currency landscape than what we have today. If banks of different digital asset groups want to settle trades with one another, they'll have to make markets between their unique digital assets or trade between their digital assets and a common fiat currency. What a mess. And folks, that's exactly it. That's what I've been trying to say this whole time. I kept asking myself, where's the trading pair? You'd have to build brand new markets just to connect all these fragmented pieces together. They're literally rebuilding the same broken system, just with shinier technology. It's silly. There's no other word for it. It just is. So Brad keeps going and he says, the second big problem with the utility settlement coin is it seems it'll be backed by a basket of currencies. Once backed by cash, it's no longer an asset, it's a liability. Trading liabilities then ultimately requires moving cash across borders, recreating today's system, but adding more friction. And folks, this is the part that always cracks me up. Like, that's exactly what's going down here. You're rebuilding the same thing that's already out there, and you're actually adding more friction to it. So yeah, maybe you get some technical perks with faster speeds and all that stuff. Sure, but you still can't get around the basic fact that you're creating the exact same thing. A walled garden is a walled garden is a walled garden, my friends. There's no way around it. So Brad says, we strongly believe banks need an independent digital asset to enable truly efficient settlement. And we believe XRP is best positioned for that role. It goes back to the fundamentals of what makes digital assets unique and special. They're universal currencies, meaning anyone can use them as units of value anywhere in the world. That universality gives digital assets global reach and the ability to settle much faster than traditional assets. Look, this is exactly what I was getting at earlier. XRP doesn't belong to any one country or government. It's truly jurisdictionless. And here's the thing. There are real geopolitical reasons why some people won't touch certain coins. If a coin is tied to a specific fiat currency, well, that comes with baggage. That's just reality. Now, will there be one coin that dominates everything as the ultimate bridge currency? Number. That's not happening. Stablecoins work for certain things, and they'll keep working. That's fine. But here's what's also true. XRP is built for exactly this kind of use case. And the adoption is there. You can sit around and argue all day about whether it should be bigger by now. Honestly, I don't really care about that debate. What matters is it's working. It's moving in the right direction. So give it another 10, 15, 20 years. If it keeps on this trajectory, the numbers are going to be a lot bigger. Simple as that. And then he goes on to say, compared head-to-head with other independent digital assets like Bitcoin or Ether, XRP settles the most efficiently cross-border in just seconds. In fact, we've run tests with global banks to prove XRP can lower liquidity costs for cross-border trades. More to come on that front. So here's the timeline, right? Back when I said all that, XRP wasn't even live yet with Ripple's technology as a bridge currency. If I'm remembering correctly, and don't quote me on this because I'd have to double check, I think the pilot program launched around October 2017. It's been a minute since I've thought about these dates. Then it took another year. October 2018 is when XRapid actually went live. That was the big one. XRP being used as an actual bridge currency. And you know how these things go with branding. XRapid got renamed to On-Demand Liquidity. Then they rebranded it again to just Ripple Payments. But the point is, that's 7 years now. 7 years of this thing being live and operational. And look, you can complain all you want about the adoption rate. You can sit there and say, it should be bigger by now, or whatever. But come on. It's going in the right direction, isn't it? Plus, here's the kicker. Even if stablecoins end up winning this race, Ripple's got RLUSD. And guess what RLUSD needs to function on the XRP blockchain? That's right, XRP. So either way, XRP still wins. That's the crazy part, right? Like, even if every single person who's been trashing XRP for years, even if they're all right about everything, XRP still comes out ahead. And you know what kills me? They never bring that up. It's like they don't even see it. The only scenario where XRP loses is if Ripple just completely implodes as a company. And look, at this point, come on, that ship has sailed. That's not happening. Anyway, I'm just having fun nerding out over here on a Sunday night, taking a little stroll down crypto memory lane. But hey, real quick, I'm obviously not a financial advisor. Don't go buying or selling anything because some guy on YouTube got you hyped up. That's how people lose money. Don't be that person.